Gold is big. This 100 kilo gold coin, one of the largest in the world, cost the dealer CoinInvestDirect about $2.5 million in 2007. The company is now selling it for almost twice as much. It's a common story of gold's 10-year bull market, a rally that's been defined not by consumers but by investors. Hot new commodity investment vehicles have opened up the gold market, but the financial crisis has also caused a spike in the sales of traditional investments, such as gold bullion and coins. This has kept coin producers very busy, such as the UK's Royal Mint, here in Wales.
Sales of the Sovereign are up 400% year on year, and the sales of Britannia, particularly in silver, are up by about 25% year on year. It's a very successful time, but it's not just those coins. The whole business is doing extremely well. And in the commemorative side of the Royal Mint, November was the biggest single month we've ever had in our entire history. Clearly people are seeing precious metals as a way of investing. It's not always easy to get hold of gold and silver, so coins are a way of doing that.
Last year, investment overtook jewellery as the main source of gold demand for the first time in 3 decades. As investors have driven prices higher, the jewellery industry has been forced to change. Jason Holt runs a high-end jewellers in London, which designs, makes and sells bespoke items for the luxury market. To keep costs down, he's had to rethink the company's manufacturing process.
We are going far more into the technology route, computer-aided design, computer-aided manufacture, CAD/CAM as it's known, so that we really reduce loss completely rather than something handmade that has maybe a 15-20% loss. And the second is we're going to bring in-house in early 2011 the casting process, which we currently outsource, and casting houses notoriously put on a healthy margin on gold price. So that is a way we're trying to mitigate the high price. It could mean the difference between paying £1,000 rather than paying £500 for gold.
In the European gold market last year, sales of scrap exceeded production of new jewellery. In effect, the region has transformed from a centre of gold craftsmanship into a gold mine. With the US Federal Reserve looking to keep interest rates down, the trend for gold investment is likely to continue.
Low interest rates are key to investment demand for gold. We see low real interest rates around for at least another 18 months. So yes, we think gold can reach 1,500 next quarter. With sovereign debt problems in Europe, there's also increased demand in Europe. And also as the Chinese gold market is starting to develop, we're also seeing increased investment demand out of China. With we estimate investment demand in China up almost 70 to 75% year on year.
There are those that argue that the gold bull market is a bubble primed to burst as soon as other assets, such as bonds, start offering more attractive returns. If and when that happens, will the gold jewellery market bounce back?
I think commodity price increase is just one of the factors in terms of what customers do with jewellery. So if gold price was to decrease significantly, I think you would see more jewellery coming on, more gold jewellery coming back into the market. But I think it's going to be much more influenced by brands, by the look, and by alternative materials.
As long as economic uncertainty prevails, gold and silver are likely to remain in favour, and mints such as this one will stay busy. But if gold's critics are right and investment wanes, the precious metal could be in line for a sharp reversal of fortunes. At that time, the market will look to traditional sources of demand, such as jewellery, to pick up the slack. The question is, will the jewellery industry have moved on from gold? This is Jack Farchi for the Financial Times from the Royal Mint in Wales.